Tesla stock. Folks, we have a lot of big news in relation to Tesla to talk about here. 5 different things I want to share with you guys, talk about here. We're in an interesting time period because of the Elon Musk saga, the Twitter, the thread stuff. I mean, it's really taken a lot of attention away from what Tesla's up to, what Tesla has going on, which is some amazing stuff. And so I thought this would be a good opportunity to just share some stuff that's come out here in the past, we could say 48 hours or so around Tesla that I think is really, really intriguing, some really good news, some stuff that matters significantly for Tesla stock, the future, and many other various things. By the way, thank you everybody subscribe to the channel. We're now well over 30,000 subscribers on the channel. I appreciate y'all being here as always, but everybody's caught up into this whole Twitter versus Threads situation. You guys know my opinion on this the whole time. I've never wanted Elon to take over Twitter. I've always looked at that as just a huge distraction and something that's not going to benefit, in terms of Tesla and Elon longer term. And I hope it does, but it's just one of those situations, man. In Twitter, traffic keeps tanking worse and worse. And ever since Threads dropped, obviously it's dropped significantly more. So now people are worried about, is Elon going to have to sell a bunch of shares of Tesla stock to fund more Twitter related stuff? So I mean, it's a never-ending drama in regards to the whole Twitter situation at the end of the day. The best way I could put it would be like, I don't know, Jeff Bezos or, Tim Cook. It'd be like Tim Cook, trying to take over. What's the far-right app that like a ton of people use? I can't think of whatever that one is. It's like them taking it over and being like, we want to have a more fair debate. We need more Democrats on this app, and we need more these sorts of views. It's just like, it's a losing battle, and you're just going to end up in a way bigger negative situation than you ended up in before, and that's exactly what's played out here in this Twitter mess. And we'll see where it all goes, but it's not looking too good in relation to that. So let's talk Tesla, okay? So first thing up here that I thought was really interesting, Tesla's offering to pay people between $18 to $48 an hour to drive its EVs this summer. Look at this. Tesla posted a series of job openings for seasonal test drivers. The company's willing to pay $18 to $48 an hour. That's a pretty wide range, by the way, okay? Tesla uses some of its test data to improve self-driving features. But essentially what's going to happen here is Tesla's going to hire folks to basically for about 3 months, it looks like, drive vehicles around in different situations, okay? And how does the vehicle handle situations and really let the self-driving technology really drive the vehicle rather than the person, right? But you obviously can't have the vehicles drive themselves, so you need humans inside. And so I think this is brilliant. We know Tesla's to that last stage, and we'll see how long this takes them to finish off this last stage. Is it 6 months, 6 years, 3 years, 1 year, 2 years? We'll see. But they're really at that last stage of self-driving, which is, perfecting that last few percent. But that few percent is what makes or breaks the technology. And so I'm looking at this as, I think it's a good decision by Tesla. I think there's certain situations that they want to see handled by this self-driving software. And at the end of the day, you can't I guess you can say employ full time like a fleet of people just trying out these vehicles. In terms of some individuals, some don't like to share the data in relation to their driving habits and the self-driving software and things like that. You get asked if you own a Tesla if you want to share the data. Some people do share the data, some people don't share the data. My personal opinion, if you own a Tesla, I think it's worth sharing the data. I mean, certain things you might not want to share the data about, and that's perfectly fine. But for Tesla, the self-driving software, I think that's something that advances humanity. We know there's a massive amount of people that die each day and every single year in obviously auto accidents. And I think, it's a better thing, especially if you got the full FSD, to share that data out there so the vehicles can learn more, and so obviously Tesla can learn a lot more. So that's kind of my opinion in regards to that. So that's the first piece of news, okay, which just shows you how close Tesla really is here to the end. The fact that they're willing to pay people to literally drive the cars and test out some of these, softwares in certain situations, right? Tesla price target hiked to $265 at Jefferies. Auto gross margins likely troughed in Q2. The Tesla price hike train on Wall Street rolls on, with analyst after analyst trying to keep up. The latest to hop on is Jefferies analyst Felipe, who bumped up the firm's price target on Monday to $265 from $185. Though the new price target was 3% below Tesla's opening share price, I always love that, okay? You up your price target in a substantial way, but it's below whatever, the stock's actually trading at a particular time. Cracks me up, okay? Though the price hike followed a number of analysts who moved their targets higher in the wake of Tesla's strong Q2 deliveries report last week. Tesla reported Q2 global production. We know that numbers and whatnot, right? But the bottom line is in relation to this, right? We join a consensus view that Q2 will be a trough in auto gross margins. Adding Jeffries noted a shift in valuation drivers, notably based Tesla's lead in AI-based self-driving software. The themes of of gross margins bottoming out and the realization of AI was fueling Tesla's recent run-up. And also noted Goldman Sachs, Morgan Stanley, through those banks as well as Jeffries, feel the re-rating of the stock in those themes is unwarranted at this time. So, what do I feel about margins? Do I think margins have troughed now at this point in time and they're going to get better in future quarters, meaning, Q3, Q4, in 2024, obviously? My opinion on that is yes, as long as the economy stays decent. If the economy was to go into a major recession or something, I think you throw out whatever you're expecting margins to be. It's a possibility. Elon and the management team could definitely decide to obviously just continue to capture market share if there's a major recession. Assuming the economy stays decent, especially if it strengthens, I expect Tesla, if anything, to actually raise price of vehicles while cost is still coming down, and them to actually get in a much stronger margin position and expand margins rapidly. Also, we do have to acknowledge Cybertruck's coming to market. Cybertruck could be a drag on margins for the next, depends on when they go into some sort of real production. Could be a drag on margins for 2 to 4 quarters, the first 2 to 4 quarters of production. But after you get through that 2 to 4 quarter kind of time frame, I think Cybertruck's going to be a huge boost up for margin. Pickup trucks just historically do very, very well margins-wise, and I wouldn't be surprised if Cybertruck's the highest margin vehicle for Tesla very shortly after it launches nonetheless. So yeah, I will agree with that, okay? Next up here, I don't know if you guys saw this one. Mercedes-Benz is the latest car company to sign on for Tesla's EV charging stations. Mercedes-Benz delivers drivers are joining the growing group of electric vehicle owners who use Tesla's high-speed charging network in North America. Mercedes said on Friday that its customers will be able to use Tesla Superchargers in 2024, giving them access to more than 12,000 charging units. Electronic maps in the Mercedes cars will show Tesla chargers, including their availability and pricing. How does Mercedes-Benz pitch this? Let's hear it. Okay. To accelerate the shift to electric vehicles, we are dedicated to alleviating the entire EV experience for our customers, including fast, convenient, and reliable charging solutions wherever their Mercedes-Benz takes them. It sounds like a Mercedes-Benz statement, I'll be honest, okay? So it's just another big traditional automaker throwing in the towel and basically saying, Tesla, you've solved this problem, let's go ahead and use you. Which, as a Tesla shareholder, thank you. We will gladly take that business. And I think it's just going to expand Tesla's lead because obviously this is going to give Tesla more reasons to build more chargers in more places, have more superchargers. And so as a Tesla customer, a lot of people have been worried from the Tesla customer side. Oh man, is this going to make our experience horrible as Tesla customers, right? I got 2 Teslas, right? I think it's going to make it better. Because at the end of the day, Tesla, the Tesla team's going to just continue to build out superchargers, I think, far more. I think there's going to be, if we fast forward 5 years in the future, I think there's going to be a dramatically bigger amount of superchargers. And I think there's going to be a dramatically bigger amount of locations where you can supercharge, which for me as a Tesla customer is good. Because if you travel with a Tesla and you're somewhere that's not by your house, right? And you need superchargers, they're not always in the most convenient locations. You might have to drive 5 miles, 10 miles for that. Versus the gas stations are everywhere. They're in every flip and flapjack and corner, right? And so the more I look at this, the more I think it's going to make for a better customer experience for Tesla. And obviously, it's going to be a huge boom for Tesla's business model in general, right? So I love it, man. I absolutely love it. Brilliant. And it's going to help EV adoption in a much more substantial way. And I think that matters, because if we're going to flip this, I believe last quarter, EVs were like 7.2% of vehicles sold, I believe, in the United States of America. That number is going to go to 100% someday or very close to 100%, right? And so we got a long way to go with this, and we're going to need more charging stations to get us to that point, okay? Next up, Jim Chanos, the famous short seller of Tesla. What does he have to say? He's out here with some interesting words. Veteran short seller Jim Chanos has taken aim on Tesla's self-driving technology, saying the add-on offering probably has near zero value in the resale market for cars. He says, quote, the current value of Tesla full self-driving package is probably close to zero in the retail market. Hashtag reality check, Chanos tweeted, responding to a tech reviewer. I gotta love it when even like the bears on Tesla still have to tweet about Tesla. That just cracks me up. Remember that Musk has said that owning an FSD package will increase the value of your Tesla vehicle by multiples of the FSD package cost itself, yet ascribes almost no value to it upon repurchase. In fact, over time, it depreciates faster than the vehicle itself. Tesla's full self-driving FSD kit costs $15,000 to install. The company's electric vehicles and buyers are treated as beta testers, whose feedback provides, obviously, you can improve the technology. That goes into what we were talking about earlier. Now, I don't want to say he's off on his point because he has somewhat of a valid point there, but we got to admit, like, FSD is not a finished product yet, right? So when we're talking about FSD being worth a lot more, let's say, for instance, than are the headlights on or the Model X? I think they are. That's weird. But in terms of looking at this from a perspective of when we talk about FSD being worth a lot more in the future, that's really a scenario where you could have your vehicle go out and drive like it's an Uber and go make you money, okay? That's when FSD really becomes worth a lot. Because if all of a sudden you got two Teslas in the garage, my Teslas spend 90% plus of their time just sitting in a garage, right? I can say, let me go put my Teslas on the network, charge a certain price, and then they can go pick up people and give people rides around, right? And great. And then it drives itself back home, charges up, beautiful. So if there's that use case, obviously FSD is worth immensely more in that environment, right? But for right now, when the software is not all 100% done, right? And when you can't go make you money, of course, it's not going to be worth, what you would think it's worth in the resale market. So he has a somewhat valid point, but it's also like it's a kind of a stretch in taking that away because everybody that's ever talked about FSD being worth a lot more in the future than what it's worth now is really talking about the Uber type opportunity where the car drives, people around and you get to make money while you sleep essentially, which is a pretty cool thing. And I think that will happen eventually. It's just a question of what year does that happen. Okay. Now, Rivian stock is being a beast right now. I don't know if you guys have seen Rivian stock, but that stock's been doing absolutely extraordinary. Okay. And it's interesting because not a lot of people know that they might be actually directly benefiting from Rivian's kind of move here. So if we go ahead, wait, did I not hit this? Rivian, and I have it somewhere on a watch list, but I'm not sure where. Let's go ahead and take a peek at Rivian on a 1 month basis here. Let's see, Rivian, 78% just in the past month. That's incredible. In the past 5 days, Rivian's up 38 flip and flapjack in percent. Okay. Now, you don't have to own Rivian stock to make, let's call it, gains from Rivian stock. There's another way you can participate in Rivian. If Rivian does great over this next, 5-10 years and becomes a massive automaker, which I think is a potential, you can participate through that through Amazon stock. I personally own Amazon stock. It's been one of the top stocks I've been buying for the last 6 to 9 months. And obviously Amazon's main businesses are their e-commerce business and AWS, right? And they got other businesses like Whole Foods they own, and their advertising business and Twitch and other things, right? But they own a substantial portion. If I recall, I believe it's just over 20% of the total Rivian company Amazon owns. So it's just another thing that's out there, like, if you want to kind of be a beneficiary of Rivian, but you don't want to own the stock, you can also own Amazon stock and benefit just as much. Amazon always reminds me of Tesla's twin in terms of the way those companies are valued, in terms of their long-term opportunities, in terms of obviously game-changing CEOs. Obviously, Bezos stepped down a couple years ago, but his DNA is still in that company, obviously. And so, yeah, man. Anyways, a lot of exciting stuff happening at Tesla. A lot of big stuff that I think is not getting the publicity or the talk right now because everybody's talking about Elon Musk and what he's tweeting and that versus threads and all this stuff, and it's just exhausting. But believe me, there's a lot of stuff that's going on at Tesla that's extremely exciting for Tesla, the company. And yeah, so anyways, guys, appreciate you joining me. Thanks so much. I appreciate y'all. Thanks for being here. Thanks for being subscribed. 30,000 plus subscribers on the channel now. Holy smokers, that ain't no dang jokers. Also, if you're looking to apply for my private group, you want to fill out an application, that's the pinned comment down there. We can see if you're a good fit. Maybe you are, maybe you're not. Oh well, much love. Appreciate y'all, and have a great day.